We are almost live. Ooh, look at this. We are actually live. Cool beans. Cool beans. Well, let's get ready to rumble. Alrighty, alrighty, alrighty. Hey, Michael. Hey, everybody. Tim Romano, Jeff, Nick, Gertz. Hey, look at this. Brandon showed up. Brandon, you know what we haven't seen for a while? I haven't seen Arcuna. Insane. What was that? I missed that comment. I gotta go back. Insane day for ASTS. Cool beans. Good evening, Edwin. Frederick. Becca, that was cool. Thank you. Live goal achieved. Cool beans. I didn't have a live goal. I have no idea what those are. Okay. Interesting stuff. Interesting day today. You know what? I really honestly don't know if it was. Okay. I didn't even pay attention to what the market closed at. See, when I say the 10-minute trade, seriously, that's what I mean. I barely look at it. But let's get started. It is August. August. August 15th, 2024, 9 p.m. Botark Dogs. What's happening, Doc? All right, so let's get the disclaimers out of the way so we can get on to looking at some interesting, fun stuff. First and foremost, I am not a anything. Is that weird? I'm not in anything. I'm just some random guy on YouTube. Don't believe a word I say. Do yourself a favor. Do some research. Just because I tell you Kohl's continuously goes up and this is what the bottom is, that's what the top is. Do your own research. You are responsible for your own actions. This is just for entertainment purposes only. Blah, 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 all that stuff. So, with the disclaimers out of the way, I'm not a financial advisor. I'm not a stockbroker. I'm basically just a guy down the street, around the corner, who found a strategy and created a strategy for his daughter, which seems to work out wonderful. 1% per week. 1% per week, safe, predictable, and consistently. That gives me over 50% return per year. Now, I'm not bragging saying I have a whole shitload of money. I don't. I have just enough to get by. You know, I don't have a Lamborghini, don't want one. You know, don't have a brand new truck, don't want one. You know, I don't live in a mansion, don't want one. Get to a certain point in life where life has different meanings. So money is not the driving factor for me anymore. So I just enjoy life as I'm going. So I have enough to get me by, perfectly okay with my 1% per week. So I've been working since I was 13. So I got saved up enough so that I can retire off of 1% per week. So that's what it is. All right, that's how it came about. In 2008, she wanted to learn what I was doing, and she was only 9 at the time. So to create a strategy specifically for her, it had to be simple, it had to be safe, it had to be predictable, consistent, and no way that she could lose. So those 5 criteria came up with, all right, rule number 1, never buy something you do not understand. If you can't give me a 30-second elevator pitch on why you bought the company, don't buy it. I can tell you almost every company I look at, Kohl's has been around for decades. We know what they do. Grocery store, all over the place. Simple, easy, okay? But some of the stuff out there's over 9,598 stocks to choose from on any day. So how do you decide which ones? Okay. So, never buy something you don't want to hold or something you don't understand. Make sure you're going into it with the intention of holding on to it for a long period of time. You actually like it that much. Great. But what do we want to do? We want to get a 1%. We want to leverage it 1%. Basically, we're not losing anything, and it's one of the safest trading strategies there is. It's called the covered call. It's where you buy a stock, a good company, a good stock, and then you sell somebody the rights to buy it from you for a premium. So if I buy it for $100 and I sell it for $100 and I collect $1 premium, awesome. It's 1% per week. That's what I'm looking for. Simple, safe, predictable, consistent 1% per week. Okay, so rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Because if you sell at a loss, you really weren't paying attention to rule number 1. It's actually that simple. Rule number one, never buy something you don't understand. Rule two, never sell at a loss. Rule three, make sure the company has consistent increased dividends. I personally like 20 years of increased dividends. Hey, Simone, what's happening? I like 20 years. Now, 20 years of increased dividend, it kind of shortcuts to the quality in my comfort level of the company. Because the dividend is a portion of the profits that's given back to the investors, and that's us. We buy and sell stocks, we're the investors. So, I want to make sure I'm putting my money into a company that is consistently profitable. Because that portion of the profits to go back to the investors, if it increases every single year after year after year, I feel a certain comfort level. I'm 60 years old. I do not want to go back to work. Okay? How many contracts do you buy in one trade? Duggo, how are you? I don't buy options. I sell them. Okay, so this, if you are looking for, okay, I just want to get this out of the way. If you're looking to make a huge amount of money in a short period of time, this ain't it. Seriously, it ain't. It is slow. It is boring. It is painstakingly tedious. Because I'm looking at the exact same companies week after week after week. Because they consistently give me what I want. So that's kind of like my job now. My job is, 15, 20 minutes a day, and I get paid 1%. So put it this way. If my account was 50,000, 50% per year would be 25. If my account was 100,000, 50% per year would be 50,000. So whatever I have, I'm getting 1% off that, and that enables me to live comfortably. So that's what I'm looking for. Safe, predictable, consistent 1% per week. Rule number 4, make sure the company has weekly options. Now, like I said, there's over 9,598 companies. Out of all of those companies, only 300 actually make the criteria that I'm looking for. Consistently profitable for more than 20 years and have weekly options. Okay, you probably heard of them. Most of them are all blue chip stocks. Blue chip stock is a company that you know, name recognition. ExxonMobil, AT&T, General Motors, Ford, Home Depot, Lowe's. Those are all iconic blue chip stocks because everybody knows who they are. Okay, so if you can get 1% every single week from all those good companies, one at a time, of course. I mean the 4. I forgot. There's a 4th. Uh-oh, Manny, I have no idea what we're talking about. Okay, Simone. Oh, we talking about the 5 rules? Sorry, I didn't get to all 5 of them yet. Rule number 1, never buy something that you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company has increased dividends. Rule 4, make sure the company has weekly options. I was talking about the 4 stock commandments of 5. All right, yeah, okay. But think about it. This is your hard-earned money. Okay, wouldn't you be... I have a safe, comfortable feeling, know that my money is in Home Depot, in Lowe's, AT&T, Verizon, General Motors, Ford, companies I know of, okay, rather than, Brad's Birdhouses or Sally Seashells or some strange thing. I have no clue what they do. Anyway, so weekly options because I want a weekly paycheck. A lot of companies actually, a lot of companies have monthly options. Okay, that's where you can buy the stock, sell someone else the rights through a covered call with a call stock option. It sounds confusing, but it's actually really simple once you get to know it. It's like anything, new terms, new words, and this new line of thinking. But once you hear it once or twice, see it in action, that's like, oh yeah, I got that. Oh yeah, I get that. Kind of like riding a bike, or remember driving a car, stick shift. What? You want me to do this and clutch and watch the road too? That type of deal. All right. Anyway. It's just a new set of language you'll understand as we progress. So you buy a stock, a nice company stock, sell the premium, giving someone else the rights to buy it from you. That's called a covered call. It's one of the safest trading strategies there is. That's why I like it. So rule number 5, make sure all the numbers work. And what do I mean about the numbers? And this is where weekly options comes in. Because if I'm buying it at a certain price, and then I'm selling a covered call through a strike price with a call stock option, It looks confusing, but it's really not. Okay, try not to make it more complicated. It's kind of simple. If I'm buying it for 1994, okay, see these numbers down here, 16 and a half, 17, 17 and a half, 18, 18. It's like child's play. It's almost 20 bucks here. Okay, I want the $20 one. Oh, here's the $20 one right there. Okay, what am I selling it for? I'm selling it for 55 cents. Well, 55 cents is more than 2%. So that's a 2% trade right there. Okay, so that's what I mean by make sure the numbers work. Now, if I'm buying it, selling it, this is what I'm collecting, that's 2%, great. It's a good company. Kohl's, I know who they are, I know what they do. Okay, I have no problem whatsoever buying them and holding them for a long period of time. Better yet, I'm getting 2% just to hold it for 1 week. 2% a week, that's over 100% return per year. Okay, and these are all safe, good quality companies. And if you don't believe me, fine, good, dandy. You look at any of the major ETFs. ETFs is an electronically traded fund. You know, you got a computer pushing a bunch of stocks together, and then they dish it out as in like a bowl of soup, so to speak. Okay, but you look inside the ETFs actually has the stocks individually. Ooh, just for the fun of it, let's do this. Let's go over to Yahoo Finance. Now, talking about an ETF, we'll bring up Vanguard. Vanguard S&P ETF VOO, very common ETF. A lot of people like it. Okay, here's the current price right here, 500 bucks. Why am I bringing it up? To show you a point. Now, ETF stands alone by itself. But what is it? It's a truck full of a bunch of stocks. Apple, Microsoft, Nvidia, Amazon, Meta, Google, Berkshire Hathaway, Broadcom, Tesla, and a bunch of other ones. So these ETFs are buying the companies and then they're selling it to you. All right? And what are you getting out of it? I'm waiting for this to pop up. Hold on. You're getting 1.31% for the year. You're giving your money to a computer to trade for you, and you're getting 1.3% per year. But it has all the good companies in it. Well, why don't you just bypass that and just go directly to the company? Okay, you go directly to the company, you buy the company stock when the dividend is ready, because stocks move up before the dividend. Yeah, Mac Daddy, that was VOO. Nice page. Did you like that? I hate VOO. Anyone who puts their money into in my humble opinion, some people have no concept of money and have no desire to do money. As a matter of fact, most people spend more time planning a family barbecue than they do in the personal finance and understanding money. Okay? But it's really not that simple once you understand, the different stuff. It's kind of like a new language. It's like, oh, here's a good analogy. It's like becoming a parent, because there's no book, and you don't go to school, and they don't teach you how to be a parent. Boom, overnight, hey, we're having a baby. It's like, okay, now I'm a dad. Holy crap, how's this work? It's basically the same thing. Whoa, I got to take care of my money myself. It's a huge step if you think about it, because most people pawn it off to someone else, take all their money and give it over to a money manager or a financial advisor, and then they take care of the money. And then you get crap like that, 1 to 8% per year. All right, just do it yourself. There's a huge difference between 1.3% that VOO's offering and 50% per year, because safe, predictable, and consistent 1% per week is over 50% per year. Okay, yeah, you have to put 5, 10, 15 minutes in a day, but average it out. By the time you get to where you want to go, you need a certain amount of money to do that. And that money's someone has got to work that money. You're either going to give it to someone else, a money manager, or some kind of a REIT, but you're going to pawn it off to someone else, and you're going to let them take care of your money for you. Fine, go ahead. But just remember this, nobody has more interest in your money than you. And it's really not that difficult. And you don't need to be in a hurry to learn it, because the stock market's been around for over 400 years. They've had stock options since the 1970s. Okay? And the covered call is one of the safest, longest what do you call it? I'm looking for a good word. I probably should have went to college, but I didn't. But it's an awesome strategy. It's one of the safest strategies, and it has longevity to it. It's like they've been doing it for so long, and it just freaking works, week after week after week after week. Anyway, let's continue. Yes, like the QQQs. Hey, inspire me more. Hiya, James. Can you take a gander at Macy's for next week? Cool beans. Let's take a look at Macy's. So I finished up my 5 rules, didn't I? Macy's. Yeah. Never buy something you do not understand. I understand Macy's. Macy's Day Parade. They've had Macy's Day Parade, what, 4 or 5 times a year? Ever since I was growing up. I grew up in the, in the 60s and 70s and 80s. Always a Macy's Day Parade. All right, Matt, we'll take a look at Procter & Gamble in a little bit. All right, let's take a look at Macy's first. All right, Macy's. I actually do have some Macy's, just to let you know, I do have some. Okay, Macy's. A year ago, we're at $15.41. That had a nice jump today. $10.42 was the bottom, and that was in October. We topped out at $22.10, and that was the end of March. Look at that, the 90 days. She's kind of like just drops, channels. Look at that channel. Now, we've been playing this since the beginning of January. We've been watching Macy's since the beginning of January. Look, it goes to 2018, 2018, 2018, 2018, 2018. Ever since the beginning of January. We just watched it, and we were playing it and playing and playing, and then this here happened. This here happened. It's like, well, wait a minute. Yep, so we're jumping back on it. I want to see that recent activity. All right. 30 days ago. Looks totally different, doesn't it? Ooh. All right. Let's take a look. Let's take a look at this chart. Now, some people it may look confusing, but once you understand it, once you're shown it once, it makes sense. And then once if you have any questions about it, it's really not that difficult. Okay. We can adjust the chart any way we want. We can look at 1 week, 1 month, 1 year, blah, blah, blah. Right at this moment in time, I'm looking at 30 days. So the past 4 weeks, the last 30 days. So way over to the left is 30 days ago, and right here is today. Each one of those candles represents 1 day. Okay, so we're here now. Now, yesterday, the price was at $16.20, and then it gapped up. Remember a couple of weeks ago, not last week, but the week before, said these 2 gaps here are going to fill eventually. Okay, and it was down here. And I was like, I'm thinking to myself, oh, this better work. I just went on live, told everybody it's going to fill, and well, this one filled within 2 days. And this one here just filled today. Now we have this gap here. Okay, so this is going to go up maybe another day or 2, hypothetically speaking, by looking at predictions. Hypothetically, it should go up a couple more days before she turns around and comes back down again. Because that's all Macy's does. It goes up, it goes down, it goes up, it goes down. I think Macy's is the one I made the most money on all year. Okay, so let's swing way back over here. The current price is $17.04. Holy cow. Do you see that? 88-cent premium? I doubt, between you and me, there's like, what, 200 people here. Between you and me, that's not going to be available come Monday. Okay? No way. I mean, that's what it is right now, okay, as the market closed. But Monday, the market maker is going to look at it and say, oh, hell no. Mark my words. All right, what's this? Let's clear that. I don't need that. Okay, so we are looking at $17.04 is the current price, right? So if I buy it at $17.04 and then I sell a covered call at $17, it's 88 cents a share. Now, some of you might just chime in and probably say 17 cents a share. Big, 88 cents a share. Big whoop. But that's 88 cents per share. That's crazy. 88. Especially when the stock price is 17 bucks. That's a 5% return for the week. That's a nice, I don't know who picked that one. Who picked that one? That one was cool. I seriously doubt that's going to happen on Monday, though. Judy Steele, how are you this evening? Dennis, how's it going, Dennis? So anyway, I don't know who picked out Macy's, but cool. I actually have some Macy's, so it's nice. Nice to know that. Sorry I'm late. No problem there, Judy. All right. So who wanted Macy's? Who was that? Oh, Inspire Me More. There you go. Okay. Procter & Gamble. Bama Redneck. Always have Macy's. Well, of course I do. If I'm always profitable and always making 2% every week, I mean, think about it. It's like a comfortable pair of shoes. You know, you slip in them, 2%. Thank you. See you next week. Judy, better now that I'm here. Oh my God, don't say that. It's going to go to my head. All right. Could we take a look at Honeywell? Oh, Honeywell. H-O-N. All right, I put Honeywell on the list. We'll take a gander at it. I got some more questions to go through. MAP is hiring. I have no idea what MAP is. Procter & Gamble. Okay. Procter & Gamble's on the list. If the numbers stay the same, I might enter 3 strikes in. I doubt I'll stay below 15.20. Yeah, 3 strikes in. That's nice too. So for Monday, what strike should we consider? All right, Drazik, you know I don't give advice. I don't. Okay, I can tell you what I would do. Now, when I say I will tell you what I will do, that's not to be confused as advice. Okay. Now, hypothetically speaking, at 17, let's quickly take a look at the seasonality because I want to see what this thing normally does this year. But you know what's strange about that, now that I said it out loud, is that this is not a normal year. This is not normal times, okay? And when I grew up, normal times where we respected the police, we didn't steal, you know, the government wasn't as corrupt as it is now. You know, it was a whole different world where I grew up. So I'm thinking to myself, we're looking at seasonality to figure out what does this normally do. There's no more normality anymore. It's going to be nice once it goes back to normal. What was that quote? Normalcy. Yes, we're going to get back to normalcy. Okay, seasonality. Here we go. You guys, it's like, squirrel. Seasonality. Here we go. All right, so for those you don't know, a seasonality chart, basically, all the way over to my left is January 1st. All the way over to my right is December 31st. So this is, I have it set for 10 years worth of data. So I'm looking at 2014, 2015, 2016, 17, 18, so on and so forth. 10 years worth of data. The red line represents the average movement over a 10-year period. Now, I could set it for 5 years. I could set it for 3. I could set it for 20. I like 10 years, okay? Just to let you know, you can change it however you want. I like 10 years because it gives me another sense of comfort. You know, if the company keeps doing it. Anyway, okay, so the blue line represents what it's doing now. See how it's kind of the same? Kind of. So, here's where we are. I want to see what it normally does this in that time frame right there. So I'm going to bring my mouse here, click right, no, click left, drag right. Yeah, click left, drag right. So she's in a little tiny bit of a downturn this time of year. So, wait, right here. That's not a downturn. Holy cow. That's almost flat. Okay, that's almost flat. Check it out. Nice, about till the end of the month. And then she dips a little. So we have the rest of the month, hypothetically. Now, this is not guaranteed. This is just what it did last year, the year before, the year before, the year before. Macy's is not a company innovative with new products where it makes the pot, which makes everybody go, oh, I gotta get to Macy's. No, they don't do that. It's just like business as usual. You know, let's go to Macy's and blah blah blah. Okay, so nothing big, just kind of flat for the whole rest of the month. Cool. So let's get back to where we were. So I would be thinking maybe this week. What is this week's going for? Yeah, it'd be at 1% for one day. Not really. Nah, it's not even worth it. But I don't know. Because look where the high is. I mean, the bottom right here, right? 1460. And you have all this run up here, and you have a gap up. You can't ignore it, because that is going to fill on the way down. Okay, because they usually do. Not guaranteed, but they usually do. Okay, it goes. It has I think it has just a little bit more to go, and it's really going to depend on. Someone mentioned the other day something about some negotiations, but a new deal on the table with Macy's. So far, I know they had 4 deals so far this year. What, like three or four deals this year so far, and they walked away from all of them. So I'm kind of interested to see what happens this time. Anyway, so that's Macy's. That's something to take into consideration. You know, it's like I don't know if we'll be able to go for another whole week without dropping. So you got to keep that in mind. So whoever had the idea of going in 3 or 4 strikes in, see right now what he meant by 3 or 4 strikes in. Okay. Imagine this line right here is the water line, okay? Just think of it as the water line, okay? When you're in the water, you're in the money, okay? When it's dark like this, you're out of the water. You're out of the money. Right here where the line is, that's at the money. Okay, so if I'm buying it for 17, here's the 17 right here. That's going for 88. If I went up to 15, I'd still bring in 210, but no, that one wouldn't work, because I'd only be getting 10 cents, and that wouldn't be worth it. See that? Because right, it's 210. You add that to that, and that's 1710. Yeah, that ain't worth it. This one here, 1740. Okay, that's 2% right there. The 16 is. You ever draw a blank when you're trying to do math in your head? All right, 16, 17, 47, you bring it in 43, 2%. Yeah, 1650 is only 2%. So going deeper in the money, you're not getting the 15 and a half or the 15, you get your 1%, fine. Okay, but at the money right now, that's crazy. Anyway, well, let's move on. Procter and Gamble. Did I write it down? I already written down. Okay, so let's finish up the list from yesterday, because it would be kind of rude of me to abandon yesterday's list. Or would it? Anyway, we all like Nike, so let's take a look at Nike. $82.70. Ooh, look at that jump up. Another nice jump up today. Okay, $82.70. The 82s are going for $1.64, but you're losing 70 cents. You're walking away with 90. All right, it's a little over 1%. The 83s, yeah, you'd be better off with the 83s. I'm just doing it in my head real quick with the numbers. You get a higher rate of return at 83, and you only get 30 cents to go. Can it make 30 cents in the next week? I don't know. Maybe it will, maybe it won't. Okay, but you get a higher rate of return at the 83, but the stock has to move up. The 82, the stock doesn't have to do anything. It can stay right where it is. It can even come down a little bit, and you'll still make it. You make your 1%, going 2 strikes in, or 3 strikes in, I mean. So anyway, it's all about the numbers. If you want 2 or more, go further out. But then the stock has to move up. And there's no guarantee that it has to move up, because stocks only go 3 ways: up, down, or nowhere. And I don't even know why they call nowhere as a way, but it's kind of a way, because as the days go on, what did the stock do today? If it goes nowhere, it's just like flat. Anyway, Where were we? Oh, Nike. Let's take a look at the last 30 days with Nike. Look at that. 30 days ago, we were at a bottom of 71.24. Look at that movement. I love seeing movement like this. Now, it may sound strange to some, may sound strange to some of you, but take a look. 30 days ago, a month ago, look at the movement. Up, down, up, down, up. Now, this is why I like to buy, 2 days after the 30-day bottom. 1, 2, jump in, and it goes up. All right, and I get my 1%. And then down here at the bottom, 1, 2, jump in, make my 1%. Come to the bottom, 1, 2, jump in, and make my 1%. I love movement like that. Okay, so we're way up here now. So what do you think? Would you want to buy it, or would you say, wait a second, I want to get rid of mine? Okay, so I like Nike, I do, and as a matter of fact, I do have some. I'm going to write Nike down for 2 weeks. Okay, so for those of you keeping track, 2 weeks from not this week, next week, the week after. So 2 weeks we're gonna look at Nike, because there's profit taking waiting to happen here. You see how it went up, down, up, down, up. She skipped, went up. So those people that buy here or sell here, they're here. It's like, wait a second, it keeps on going. So now they say, I'm going to jump ship before I lose this. What do they want to call that one? This moonlight ride, because they don't last forever. Goes up, the profit's going to be taking in the next couple of days, and then next week she's probably going to come down, and then we'll jump in 2 weeks. Andrea, 1475. If numbers stay the same, next week, yeah, I got that one. Okay, Matt, we're going to take a look at Procter & Gamble in a minute. Andrea, what are we talking about on Macy's? 1475. Okay, I'm a little lost, but all right. Anyway, let's move on. Procter & Gamble. Interesting. For those you did not know, Procter & Gamble is over 100 years old. They are a dividend king, which means they have increased their dividends every single year for 5 decades or more. This one pops up, always a yes. For me anyway. All right, 168, I'll be looking at the 167, that's all they got. Yeah, that number don't work out very well. Okay, so I gotta get, numbers get like this, I have to get my calculator out, sorry. All right, so the 168, we'll be looking at the 167 and a half. Okay, 167 and a half. And that is going for 167. That's exactly 1%. Holy cow. All right, anyway. Okay, we're going to add that 167 to the strike price, because that's what our profit's going to be. 167. All right, so that's my selling price, 169.17. All right, so let's subtract. This is a lot of math in this one. 168.38. I hate when the numbers get big. 79 cents. Yeah, that's gonna be no. Yeah, this one just, the numbers just aren't working on this one. I like it when it's 1%. Once you get up to these weird numbers here, $2.50 increments, 160, 162.50, 165, 167.50, 170. Once you get into those, then you have to do some fancy math to see if what am I collecting, what am I buying it for, where's my profit, what percentage is that? Now, when you look at companies over 100 years old and been having dividend kings, very seldomly do they actually have premiums that give you over 1%. Once in a while they do, but for the most part, they get close. Coca-Cola only gives like 0.6% per week, a little over 0.5% per week. But think about it, 0.5% per week is still 26, 27% per year. That's still nice. And you go with Coca-Cola, Procter and Gamble, Johnson and Johnson, to name a few that stingy on the premiums. Alrighty. Next on the list. Oh, Andrea, good for you. Andrea, I see, that's lovely. You jumped into Macy's at $14.75. So here's an interesting question. Where are you getting off? It's like you're jumping on a Ferris wheel or a merry-go-round, and you have no idea how long or how fast it's going to go. So when you jumped on at $14.75. Great. It is where it's at the moment. Where do you plan to jump up? Because it's not a profit until you take it. I mean, it's nice looking at that number on that piece of paper, and you get bigger and bigger and bigger. But it's not yours until you take it. Nobody ever went broke taking profits. All right, let's keep going. Ooh, what's that? Mark wants to take a look at WBA. Ooh, another update for WBA. Just to let you know, I do have some WBA. Where are we? Right, there we go. The 15th, last 30 days. Cool beans. Ooh, doesn't that look pretty? Take a look at that. Way over here, 1140, jumps up to 12, drops to 1080, jumps back up to 1230, then comes back down here. There's a little gap down here. That baby's gonna fill. But look at this, 30-day bottom there, 1, 2, 3 days to the upside. Look at where it is compared to where the 30-day high is. That would be a nice ride. All right, so 1082. Okay, so at 1082, the 11s are going for 11. That's only 1%. But hey, it's a safe bet. 1%'s a nice. And this is what we're looking for. A Walgreens, they may have some issues, okay, because of the current administration. Not prosecuting theft. So they're closing down some stores, and they're getting a lot of heat in the press. So that pushes the stock down, as you can see. But the company's been in business for over 100 years. They have 8,700 stores. We're not talking 1 or 2 stores. We're not even talking a dozen. We're talking 8,700 stores. So when you say you have some of something, does it mean for this week or long-term investment? Drazik, dude, you've been here long enough to know, okay? The longest I've ever held anything was 9 months, and I didn't do it voluntarily, okay? Now, I do have a couple of stocks, AEO, that I bought April 1st. So what, month number 4? Am I panicking? No. So when I say I have it, you got to remember, I get 6 different accounts, okay? I share with you guys 3. It used to be 2, but now it's 3. I share 3 accounts with you guys, so the other ones, those are, when I say I have some, that means I have some in either one of these accounts that I share with you or a different account. That's all that means. And I don't hold anything long term. Not even, I don't even have, no. Not even for my children or my grandchildren. Nothing's long term. It's all a revolving door. Or, I just got this weird vision in my head of this little cartoon character going like this. This is my money, this is my money, this is my money. Just keep on going and going and going. Kind of like the Energizer Bunny. No, I don't park my money anywhere. I do not buy an asset and just let it sit and collect dust. No, sorry. That's like a lot of people, they buy gold and say, hey, wonderful, you got a big fat dust collector. There's nothing wrong with it. It's just different strokes for different folks. I grew up dirt-ass poor. We were on welfare, But you get to that point, you get motivated about money a little bit differently than, people that weren't on welfare in the 60s and 70s. But anyway, it is what it is, I can't hide from who I was or, Anyway, besides the point. Let's move on to the next one. I'm confused. So anyway, I really don't think it's going to be a big issue with Walgreens. I mean, yeah, they're getting rid of 25% of their stores. Okay. But isn't the whole economy, isn't the whole world transforming from brick and mortar to online? Yeah, they're going to continue to have brick and mortar stores because some people like to get out and socialize and go shopping. Some people actually enjoy that. I enjoy grocery shopping. Okay, get out of the house, unplug from that damn freaking computer, get away from the television. You know, go outside, play in the garden, go to the, that's why I get my social activity, going to the grocery store and church. Anyway, Walgreens, yeah, I don't see a problem with it. That's probably why I already own some. Target, Sheila, how are you, Miss Sheila? Target, TGT. All right, here we are. Target, interesting. A year ago, 127, bottomed out at 104, topped off at 182, 182. Look where we are now. Ooh, there's that black swan again. Okay, now we were talking about this the other day, and I don't remember exactly who it was, but who it was, remember that we were talking about Target the other day, and I said it's very susceptible to black swans. It went from 119. Wait a second, what did it do? Holy crap. All right, from the close. Okay. From the close yesterday, 135. Okay, the close yesterday, 135. 135. That's only $6. All right, $6. 130 from 135 all the way up to 141, and then continue to go to 144. Okay, so that's like $10. All right, but it's one of those black swans, and they do happen. In some companies, this is like the fourth one in a year that Target has. Okay, so I'm very leery when I go into Target, when I go into a position on Target, because if you miss it, last year I bought it at 135 and I took it all the way down to 102, and then it jumped up 16 points and I had to pay the piper. All right, so these things aren't always glamorous. It all depends on what side of the fence you're on. And at that moment last year, I was on the wrong side of the fence. And it's just part of the game, and you better understand that, comes with terms with that before jumping into this kind of a game. Yeah, you can double your money every couple of years. I mean, at 50% per year, you can double your money, what, 16 months, 18 months? Okay, and that's freaking awesome if you can do it. It's very disciplined. Okay, I do the same thing day after day after day after day. I take the weekends off, the mornings, because I'm kind of looking forward to a Saturday morning because I get to sleep in, I won't have to get up, whatever. Anyway, so that's Target. And I don't know what we're supposed to be looking at. Okay, last 30 days. Here we go. Get two gaps here. Okay, this one filled kind of quick. This one's coming up next. So you're going to fill that gap, and this will probably keep on going up. I don't know if it'll come up, continue here and go up. There might be some profit taking, go down a little bit, then go back up again. We just don't know. But, yeah. Susceptible to black swans. Okay, what we have next? Map, Procter & Gamble. We already looked at Procter & Gamble. All right. What do you do instead of just investing in S&P? All right, Mike, I'm pretty sure you're not talking to me. It's weird. You guys are carrying on conversation in the background. I'm totally clueless to it. Johnny, how you doing, Johnny? Honestly, if the numbers are the same tomorrow, I'll just liquidate. There you go. Okay, Flipper wants to look at Johnson & Johnson. Now, Johnson & Johnson, historically, even though they are a dividend king, in business for over 100 years, the premiums are always less than desirable. Okay? 159.59. The 157.50 is about for $2. Okay, at 159.59, you're losing $2. You're collecting 50 cents on a $150 play. Not even worth it, in my humble opinion. Okay, but if you like Johnson and Johnson, sure, why not? You know, if you buy it at 159, you can sell the 160s and walk away with 120, which is what, 0.75%? Okay, once you add everything together, 0.75% is not bad. What is that, like 35, 40% a year? That's not bad. All right. What do we have next? Oh, Arrow. We already did Walgreens. Sorry. They're looking pretty good, right? I'm saying the numbers are looking good. After Kohl's, can you look at Flow? What the heck is Flow? F-L-O. Flowers? No. Andrea, you've been here long enough. Those are monthly options. Okay, monthly options just don't pay the same. Okay, you know, I'm trying to figure out a way of saying it politely. You know, I don't want to waste my time looking at something that has no relevance or not a candidate for this type of strategy for what I'm trying to achieve. If I'm trying to achieve, you know, 1% per week, I can't do that with a monthly optionable stock because I can only do that once a month, which means it's only 12 times a year. I would prefer to do it 52 times a year, once per week. Okay, so, you know, growing up in the 60s and 70s, it was customary to get paid on a Friday. You know, gotta work on Monday, get paid on Friday. Okay, so it fits into my being so much easier. You know, Monday morning, great. What stocks are up on the agenda for this week? Great, this is what we're working on this week. Wonderful. So we pick a bunch of stocks we're looking at. Well, matter of fact, let's do that. There we go, right there. It just pops right up magically. These are the companies that I'm looking at. All right, I'll take a look at these first thing Monday morning. It's kind of like going to work. Do you remember that? Monday morning, you check in, you punch in. Okay, this was work. Great. What's my work? My work is to take a look at the stocks, the stock charts and the numbers for these 20 stocks. That's it. That's my job for the week. 20 minutes to a half hour doing it, and it's quick. Watch how quick it is. Oh, we just did Johnson and Johnson. All right, Yum. Let's do Yum. Y-U-M. I think. No, not Yum. Yum used to. Yeah, it's a funny thing. Yum used to be a dividend king until the CEO cut dividends about a decade or so. They got kicked off the list. Now they're slowly working their way back. Okay, another one. UPS. There we go. Watch how quick it really should be. All right, UPS. Enter. First thing I always want to take a look at. High, low, where was it, where is it, what direction is it going? Quickly you look right there, it's bouncing up. Great, I want to take a better look at it. But before I do that, what's the numbers? 129, great, I'm looking at the 129 is going for 66. No, come on, you're killing me. Absolutely not, those numbers are horrible. Okay, next. PSX. PSX. Chart, high, low, where was it, where is it, where is, ooh, nice, look at that, cool beans. The numbers, 139.55, that's what I'm talking about, 139.55, the 139 is going from 130 to 150, you could probably get you 1% out of that. Cool, well, let's take a closer look at the chart then. Let's go back, first thing I want to see, the 1 year chart. The high was 174.50, that was back in April. The bottom was the end of October at 106. Last 30 days, well, it's the last 90 days, hold on. Okay, the last 90 days. Look at the movement, down, up, down, up, down, up, down, up. Okay, so she's bouncing off of that, cool. All right, so this is what we're looking at now for the current 30 days. Look at your 30-day high, 150. Your 30-day bottom, 128. That's a big jump, a big drop. All right, down, up, down, gap, gap. This gap filled, and look how much more space he has from here up to that 150. So you could probably get another week out of this. So this looks good for next week. So I'm going to write it down for next week. So hopefully tomorrow's chart won't mess it up. But anyway, so PSX, not a bad choice. I don't know who came up with that one. Why do that instead of just investing in S&P? Oh my God, I have one already this evening. The S&P. Where is the S&P? What? Let's pull up Google. Okay, give me a second. I'm going to look at Google. S&P average 10-year return. Okay. Okay. All right. Okay. Mike, you ready? This is on Google, okay? Went to Google, asked Google a question. What is the S&P 500 average over the last 10 years? All right. Average annualized return last year, 24%. Cool beans. For the last 5 years, it averaged 15%. Not so much. Okay? Last 10 years, the average is 15.6. Not so much. The last 20 years, the average is 11% per year. Okay, so your question is, why bother with 15 to 20 minutes a day to get a 50% return? Why not just put our money into something that gets an average of 11% per year? Or 15, 24. Now 24 is a good return, okay? But it only averages out 11% per year. Do I have to go in any further? I mean, I have no problem whatsoever spending 15 to 20 minutes in the morning. It's just another part of my ritual. You know, get up, brush your teeth, have some breakfast, do the stocks, 15, 20 minutes, and go to work and do whatever. I'm retired now, so it's a little bit different. Okay? But that was my routine. People spend more time. People spend more money. I'll get it. Hold on a second. People spend more time planning a weekend barbecue than they do with their own personal finances. I don't think 15 minutes a day to be able to retire sooner and to be reassured that I'm making a decent return on my money, because nobody has more interest in your money than you. Well, maybe your ex. All right, Circle Project. Hello, happy Thursday. Barbara from Pennsylvania. No, I didn't get a new computer. Apparently it was an electrical issues at my son's house. And the computer was shutting down to protect it from what do you call it? From shorting. You know, because the lights were flickering and whatnot. Anyway. All right, Bamarock. Mike, he only holds stock for a week around the dividend. He's looking to get premium 1 to 2% per week. Wow, I couldn't have said it better myself. Should make you a monitor too. I have 100% of my 401k in the S&P for 2 years in a row, 23% return. Whoa, see, that's awesome. Nothing wrong with that whatsoever. Okay, when I say there's nothing wrong with it, fine. You want to give your money to the S&P, no problem. That's great. At least you're having some interaction with it. Okay? Now, I personally like to take full responsibility for my own shit. Okay, now the S&P for the last 2 years, yeah, nice return, but average it out longer, the long term. Okay, you're not going to get, what do they call that? Rainbows and sunshine every single year. They average it out. There were some times, you remember back in '08 where the S&P got decimated? Or how about 2021 or 2020? Or how about 87 or how about 2000? It goes in cycles. It goes down, it goes up, it goes down, it goes up. But you average it out. Okay, yeah, last year and the year before, great, wonderful. But average it out over the long haul, 11%. Anyway, there's nothing wrong with it. You do what you think is right for you. I'm just sharing what I do and answering people's questions about what I do. All right, but I would never put my money into S&P 500. Sorry. All right, let's get out of that. Bamara. Nice, got 60% of trades, yep, so far. Oh. See, so you're saying you and the government got 20. That's funny, I like that one. What determines a good dividend stock? Ooh, that's a good question. Now, this is just my opinion, okay? Just my opinion only. Okay, what I consider a good dividend stock is any company that is consistently increasing its dividends for 20 years or more. Because basically, I don't get into politics. I really don't. I can honestly care less what the companies do. The CEO's job is to make sure the company runs smoothly. So I really don't care what they do. To a degree, of course. But if the company is consistently profitable year after year after year, well, that's where I want to put my money. And if I can get 1% a week, well, that's even better. Okay, so long and short of it, any company I find to be a good company, it's got to have at least 20 years of increased dividends, which means they've got to be in business for more than 20 years and increase their dividends. And then 2, weekly options, because weekly options allows me to take advantage of the swings between the highs and the lows. Because that's all stocks do. They go up, they go down, they go up, they go down. Well, if you take the predictability of the movement and you couple it along with, when the dividends are paying, tells me when to look at the stock, along with, what is a covered call option offering me? Well, if I'm buying it at that price, selling my rights away for this price, I'm guaranteed to get that. Well, that is what I'm looking for. And that being over 1% on a weekly basis, well, that gives me my 1% per week, which allows me to live my little, I like to call it a comfortable life. All right, so we got that. All right. Grace, I have some 206, 210 Series E bonds. Should I cash them all in or wait till mature? Grace, I am in no position whatsoever to tell people what to do with their time and their money. Seriously. I mean, see, if you wanted my personal opinion, there's one thing. James, we don't see the picture, the top left YouTube. Uh-oh. Top left on YouTube. Hold on, let me just quickly check that. You'd think by now I'd know where it is, but it's around somewhere. There we go. Oh yeah! Do you really need to see me though? Think about it. All right, let me fix that. All right, let's get back to where we were. Minor interruption. Please do Lululemon. Oh my goodness. Rachel, I'm going to save you the aggravation. It's going to be a no. I The only reason why I say no, Rachel, is because they haven't been around for 20 years. Okay, so I have no idea. $2.59. The 260s are going for $4.20. Okay, 269. The 260s are going for $4.20. That's over 1%. Cool. Look at the high up here at $5.20. Now she's down. She lost 50%. And now she's bouncing off of that. Okay. Working now. All right, Felix. Okay. So, okay, so you're getting more than 1%. Great. But, where is it? Right here. It's always got to be a but. But no dividends. So it's one of those companies that doesn't share their profits. So why are we looking at it? It's a no. But didn't I say no earlier? I did. Now, the only reason why it's a no, because what happens when it loses 50% of its value? Because it just did. December, it was at 520. Now it dropped all the way down to 220. This is like a perfect example of why I like dividend stocks, because as the stock goes down, at least I'm still getting higher and higher dividends. It's a good, solid company. Now, the stock, the pricing crap, that's got really not a whole heck of a lot to do with the company itself. This is just the public's public interpretation. This is mine and your interpretation of what we think the company is worth. That's all that is. These numbers, okay? The high way up there, the low way down here. But what is your cash value that you're actually bringing in on a weekly or a monthly basis or an annual basis? Well, this company doesn't pay out dividends. So how do I know what I'm making on my money? All right, now if I bought it a year ago at 380, great, it went up to 520, but now it went down to 220. I'd feel a little uncomfortable about that. But like I said, people buy stocks to hold long term. So if we go into the stock looking as if we were going to buy it and hold it long term, fine. But at least have an escape plan, at least have a dividend that increases, at least have some kind of idea of what am I going to make consistently. So I don't like Lululemon. I mean, the numbers look good. The chart looks okay, fine. But they don't share their profits. They're a little stingy, if you ask me. Okay, I don't want to play in that sandbox. I want to play in the sandbox with my favorite toys. Give me my toys, damn it. Anyway, all right, let's continue. James, how do taxes play into everything? Or is this exempt? Oh, hell no. If they could find a way, I'm sure the IRS would tax how many breaths you take on a daily basis, or how much water you consume. Oh, wait a minute, they already do tax our water. All right, no matter what you do, death and taxes are one thing that's very challenging to get away from. So my advice or my opinion is you need to talk to a tax strategist or a tax planner to figure out how you want to play this monopoly game. That's all it is. You're just shuffling papers back and forth. Okay? I always suggest people, before you put real money into this, use a paper trading account. Now, I've been trading for over 20 years, and I still have a paper trading account because I still make mistakes. Okay? I'm very disciplined when it comes to this strategy because I have a couple accounts specifically for this strategy only. Okay? But my other accounts, well, they're a little bit more liberal. You know, different strategies. Anyway, so if I'm giving this one away for free, can you imagine what the other ones are? All right, next. Next contestant, Johnny, come on down. You're the next contestant. Okay, inspire me more. For your website, I really need to fix that. You have all your trades logged. Is that what you submit to your tax guy? You're under the impression that I pay taxes. I'm going to let you guess. But when I tell you anything about taxes, talk to a tax strategist. Definitely don't want those people knocking on my door. I canceled my subscription years ago. But, you know, new people on the, you know, what about a reverse split? Do you log it separately and submit that? Okay, inspire me more. Okay, we'll leave that topic alone. Seriously, I got flagged once when I was talking about taxes. Yeah, taxes, you need to talk to a tax strategist. Tell them, hey, I seen this. This is what I'm thinking. Tell me how I can do it and not have to pay taxes legally. There are ways. All right, Andrea, 1475. Get into Macy's. She used to have one. All good. Okay, all right. Insure Talk. Right now would be good to buy puts on Nike. Not being financial advice, but a good idea. Nike. Didn't we look at Nike earlier? I bought some of these earlier because we looked at some. I said, you know what? I'm going to buy some of those. I was talking with someone earlier today in the early morning, in the morning call, okay? The morning, the live morning show. I remember me and Mike were talking about a couple of stocks like this. I said, oh, damn, I'm going to buy a couple of puts on this thing because it looks like a profits, take me, you know, look at it. You had a gap here, almost looks like a gap there. Yeah, a little bit of a gap here, a gap there. Here's the bottom. Okay, look at that distance between 71, 71 and 83. It's a $12 jump on an $80. Well, it was $70 at the time. $12 on a $70 stock. That's a big jump. So yeah, there's going to be profit taking tomorrow, Monday, Tuesday, until it comes back to reality. You buy down here and you see this. Oh, let me pull back for a second because we were looking at this one earlier. Yeah, right there. The last 30 days. Okay, here's the last 30 days. Look at the pattern. Now, you and me, we're the ones who create this crap. Okay, we buy, we sell, we say, oh, that's too low, oh, that's too high. I'm going to take my profit. You and I create this. Okay, but look what you and I are doing. I'm saying that to public. Up, down, up, down, up. Now, the people that are getting ready to sell up here at these tops, they're getting ready to sell here because this is what they've been doing, okay, every couple of weeks. But now, she gaps up a little bit and then keeps on going. So it's like, okay, this is a good little wave. If you've ever been surfing, you know every once in a while you get a really good one. Well, here it is. They're going to be jumping ship tomorrow and the next day. So, yeah, it's a great time to either sell short or buy puts, whatever. And that's not advice. Someone's going to use that out of context somewhere. It's like, he told me to do this. No, I did not. But they'll edit that part out too. Anyway. Okay, yeah, so cool. WBA. We're going to look at WBA. Andrea, I'm looking to jump into Kohl's tomorrow. Is 22 high, or can you show how high it might go up? Okay. Oh, what was that? Didn't we take a look at Kohl's earlier? Did we? I don't remember. All right, here's Kohl's. Okay, the bottom, 1783. That was last October. Topped out at 2960, and that was the end of March. Okay. Look at the last 90 days. 90-day high, and 90-day bottom. Now it's bouncing off the 90-day bottom. Cool. Look at the movement. Down, up, down, up, down, up. Look at the gap down. That gap hasn't filled yet. Okay, from here, see from here, all the way down to here. Okay, here, it's right here now. That's what's left of that gap. And look where we are now. Now, you're going to make your money in the stock market by buying low, selling high. So when you see a good company, or that you think is a good company, hit a 90-day bottom, 30-day bottom. Well, you can't get any lower than that. And then how do you substantiate, well, is that actually the bottom? Well, for me, I like 2 days to the upside, okay? Because it may be the lowest it's ever been today, but I want 2 days to the upside before I consider jumping in. But that's me. You guys are going to have to come up with your own rules. All right. So Coles, let's zoom on in to the last 30 days. Because now the reason why I like the last 30 days is because we're living now, okay? So yesterday was kind of similar to today, which is kind of similar to tomorrow. So little changes every once in a while. So this is the last 4 weeks. So what did it do? Okay, it was 30-day high, it came down, retraced, another high, comes down, here's your 30-day bottom. Tried to go to the upside, didn't get that far, pulled back right here, 2 days to the upside. A perfect opportunity, in my opinion, to jump in. You know, it's bottom here, 1, 2 days up, and right there, a wonderful place to jump in, because look how much space you have between here and the 30-day high. Not saying it's going to go there, but that's the football field we're playing in. There's the low, here's one end zone, here's the other end zone. Okay, here's the 50-yard line. However you want to interpret it, that's a pretty good way of looking at it. Okay, here's the bottom, our end zone. There's the top end zone. Great, we want to go that way. Well, right now we're at the 20-yard line. Fuck, that's a cool analogy. See, right now we're at the 20-yard line. The 50-yard line is right here. We want to go all the way up as high as we can before we get stopped. That's a freaking awesome analogy. Okay, anyway, I came up with that. I'm going to pat myself on the back. Anyway, let's go. So that's Coles. The 1994s and the 20s are going for 55. Well, that's over 2%. Let's find out exactly what it is, because it is over 2%. So 55 cents. And it's a 1994 stock. 1994. That's 2.7%. But wait, if you order now, Johnny, tell her what is one. You get the distance between, see the 1994? Well, you get the difference between that and the 20, which is an additional 6 cents per share. Not that it's a huge mover, but you add 6 cents to the 55, now you're at 61 cents per share. That's a 20% increase. Nice. Okay, but the stock does have to go up over 20. Look where it is. Hold on a second. So it's not that, is it going to go to 20? It's when is it going to go to 20? Because it is going to go to 20. But is that going to be tomorrow, next day, next week, next month? We don't know. But all we know is, look at what's been happening. Look what's been happening. 30-day high comes down, back up. Here's your 30-day bottom, shoots up, comes back down. 2 days the upside. It looks as if it should continue going. Great, wonderful. But it will hit 20 eventually. Okay? Is it going to be this week? Is it going to be next week? That's the tough choice. So if you buy the 1994s, sell somebody the illusion that's going to go to 20, because it's going to get there eventually. Okay? For next week, it's 55 cents a share. 2 weeks out, looking at $1.27 a share. I think I like that one better. That's 6. That's a 6% return for 2 weeks. So I like that one better. Because, well, it is Coles. And I bought Coles so many times this year. Because she goes, it's kind of predictable. She goes up, she goes down. She goes up, she goes down. She goes up, she goes down. Now, what happens when you follow a stock for a long period of time? You get kind of into it. It's kind of like a niece or a nephew. Sorry to put it that way. But think about it. How often do you see your nieces and nephews? Well, at first, you see them all the time. Then over time, you get a little bit more distance. I can't remember the last, well, yes I do. Hold on a second. My mom's 80th birthday was the last time I saw my cousins. Okay, years ago, we used to see them all the time. But now, we're in our 50s and 60s. I see them once every 4 or 5 years. Okay, kind of like the same thing. But I look at them. Some of them I look at every single week because they just play so well, and other ones I look every 90 days because that's when the dividend's coming out. Anyway, let's continue. Andrea, 2170. Alrighty. Andrea, I graphed it, but I want your opinion. Oh. I'm looking to jump into calls tomorrow in the 20. All right, we just did that. That's my opinion. I don't know what you're saying, the 2170, though. Because I'm looking at it, and I don't see the 2170. I think I'm at a loss. This is why I tell people, send me your number. Send me your number. I'll give you a call. We'll chat. I love talking to people about stocks. Okay, Amy. Hi, James. I know you don't like AMZ. I'm holding that, holding that bleep bleep, and now it's going up. Should I sell it to get F? I'm going to say F is free. Should I sell it to get free? I don't know. All right, so let's go take a look at AMZ. Now, I'm going to tell you what I always tell everybody. Okay? Until you know where you're getting out, it's not really an investment. It's a dust collector. Great. Say you bought it at 200. Wonderful. If you have no intention on selling it, it has no value. It only has value when you sell it. But look at this chart. Up, down, up, down, up, down, up, down, up, down, up, down, up, down. You know how much you could make just, selling the highs, buying the lows, selling the highs, buying the lows. Now, when I say that, now it's easier for me because, the only reason I say it's easier for me is because I'm looking at it twice a day. I look at it in the morning with my morning trading group, and then I look at it at night with you guys. So I'm seeing stocks, not like this one. I've never seen this one before. So for me, it's a no, but I'll look at it for you. Okay. And I forgot what I was talking about. Don't get old. It's one of the first things to go. Oh, all right. Anyway, so a year ago, 231. Okay, you missed your high at 292. So, what I always tell everybody, if you don't know when you're getting out, how do you know it's a profit? Well, because you buy it and then you sell it. Well, you think that's the profit. The distance between when you buy it and when you finally sell, find out how much time elapses there. Okay? Now, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. So from time went from here, okay, 1, 2, 3, 4, 5. 5 opportunities to get a little bit of a profit. A little bit of profit, a little bit of profit, a little bit of profit. Rather this one right here. Okay, because if you're buying it down here, 272, profit. It's a bigger profit. So you get this one, and this one. Not just this one. I don't know if that makes sense. Maybe I'm going off on a tangent. But, how about, we're going to move on. It's not a profit until you take it. Okay, I can't tell you what to do. Okay, I can only tell you that people never go broke taking profits. Anyway, so you're all listening. I'm not telling you what to do. I'm just saying that's what it looks like. Look at that big, huge gap. Which side of the gap were you on? Okay, were you down here and you made a big chunk? Or were you up there and you lost a big chunk? See, I have no idea where you are at the moment, but only you know where you jumped in, and we all know where it is. Only you know where you jumped in, whether that's a profit or whether that's a loss. You got to wrestle with that dude up in your head saying, do I take the profits or do I hold? That's a conversation you got to take. All right, let's continue. All right, Amy. Okay, I usually read one line at a time, okay? Now I'm reading the second line down. Seems like it has room to go to 190. Honey, you're in the wrong place because this is not a game that I play, okay? And you're basically You may be wasting your time being here because I only do covered calls because they're safer. You're talking about, well, it's at 273 now, and you say, well, I think it has room to get to 290. Well, of course it does. It also has plenty of space to get to 150. It's got plenty of space to get to 35. It's got plenty of space to get to 1,000. How much time do you want to give it? Okay, because you missed this opportunity here. Okay? Right, she went up, she pulled back. She went up, she pulled back. Okay, how long have you had it? You've seen it go up and down, up and down, up and down, up and down. Okay? Take the profit, don't take the profit. Wait for it to go higher, don't wait for it to go higher. These are choices you're going to have to make yourself. Okay? But I'm going to remind you, this trading strategy I'm teaching here and that I'm helping out people with, okay, it's only looking to get 1% per week. It's very slow, it's very monotonous, very boring, and you're not going to make a huge jump like you're talking about, because you're talking about it has room to go to 290. Well, of course it does. You know, it's at 270. 290 is right there. It was there 2 days ago. Okay? It was at 290 2 days ago. Why didn't you get off the... All right, never mind. Let's move on. WST. What the heck is WST? Okay, Larry, I'm going to cut you some slack because you must be new here, because we all know I don't like monthly optional stocks. They just don't pay the same. All right? Ask yourself a question. You want to get paid once a month, or do you want to get paid every week? Okay? I'm a glutton for punishment, so I like to do things every single week. Wait, hey, James, how about Para? Ooh, let's take a look at Para. Another company we've been following. Take a look. Your bottom was right here in June. What is that, 8 something? And the top's there around 18. Drop, jump, 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 jump. Here we are right now. Look at this big jump it made today. Cool. Well, let's take a look at everything. Currently, it's 1103. All right, 1103. The 11's going for 26. That's more than 2%. Ooh, I already have Para. Don't I already have Para? No, I have Marathon. Okay, I get those confused. Paramount Marathon. Paramara. Anyway. All right, so it's giving you 1%. Let's take a look at the chart. First thing you always want to see, high, low, where was it, where is it, what direction it's going. So in overall direction, it's going down, and it's creating an ascending pennant. Okay, I really don't do shapes, but years ago I used to. But eventually it's going to get down here, and then it's going to turn and move back up again. Normally, if it's a good company. Paramount's been around for over 100 years. Hey, you might get tired of me saying that. Well, this company's been around for over 100 years. Holy shit, I got 81 questions. Ooh, wow. All right, Paramount. 11. The 11's 26. That's over 2%. Cool. All right, we're going to go through this a little quicker. All right, 30 days ago. Ooh, look at that. 30 days ago, we were at 1164. A couple of days later, 1197 was the top. Way up there is the top. And she drops, and here's your 30-day bottom last Thursday. Okay, and today, nice movement today. Okay, before I would jump into that, I would want to find out, what is that? What's up with that? You know, one of those things. What's up with that? Come on. Let's shoot a video or two. Why not? Okay. So Paramount, yeah, I want to find out what's going on with this, because that's an awful big move for one day. So once you find out the highlights, you don't have to go into the whole article of what the news is. Why did it jump like that? Just the highlights. Okay? But here's your 30-day bottom. She is on her way to the top, you know, further up, based on the current movement. You know, if the stocks go up, they go down. Well, here's your 30-day bottom, a couple of days to the upside. Great. Hypothetically speaking, she should continue moving. Okay? But we'll see how it goes. Split the difference. I'm buying whatever you're selling. Wow. I appreciate that. Thank you. I'll show you that in a minute. Who's that? Split the difference? Cool beans. All right, so let's keep on moving. So Paramount, like I said, I would wait to find out what's that all about first. All right, from there, love your ideas. Thank you, Amy. When you buy using in the money, blue are areas. Where does it auto sell? Wow, now that's an interesting question. But you got to remember certain things. It is extremely important to get the terminology correct. Because if you're buying when you should be selling, you could be on the wrong side of the trade. I'm ready to sign up. Just let me know. I'm in the TikTok stream also. Okay, cool. I'll let you know. Where were we? Oh. See, I forgot where we were. Oh, okay. When you buy using the in the money blue area over there, does it auto sell? No, it doesn't auto sell. And blue area here, this is purple. Uh-oh. All right, see, that's challenging because I don't know which one he's talking about. All right, Amy, good. Hey, the Searles family back again. Cool beans. You guys must go on vacation or something. What would make the price swing so hard? News. That's it. News. Okay? Think about it. How do you find out information about a certain company? Do you actually go in and search the news? Or does something happen in the company and just blurts out on national television? It's like, holy shit, what's going on? You know, it just... And if they had anything to do with the CMI report or anything to do with any of the reports the Feds are supposed to have today, you've seen a lot of stocks jumped up today. So news, that's what makes stocks move so much. Alrighty. Any calls or puts recently? Oh, Benny, yes. You missed a good one this morning. The good one this morning, we were looking at a stock and it had a big jump yesterday. A big jump yesterday. And wait a minute, it was this morning. Because we were on this morning, because I do a live show every morning. Okay, so we're on in the morning, and there's one particular stock gapped up really huge and kept on going. So as we're looking at it, I'm looking at the numbers and I think those can't be right because it was screaming profit taking. Because you see right here, something happened in here made it go up. Now there are going to be people that take advantage of it, especially the people that bought down here at $10. Okay, now it's at almost 11. That's an almost 20% increase. This is only a $10 stock. Okay, that is a 20% increase in one day. So you got people like me, 20% one day, hell yeah, I'm gonna take my profits. So this, more than likely, it's not guaranteed, but more than likely, you should see some people jumping ship tomorrow, selling off to grab those profits. It might drop a little bit and continue to go up, but this should be some profit taking tomorrow, in my humble opinion. Okay, Amy, I don't do Amazon because they don't share the profits. Lamberto, ABR, never heard of them. ABR. Yeah. ABR. Arbor Realty REIT. Well, they got weekly options, so why is it I haven't heard of them? Oh, let's go to Yahoo Finance. ABR. Ooh, interesting. Okay, historical data. Because they have a 12.65 return. Interesting, dividends only. And how often have they been paying their dividends? Not, oh, that's not good. Okay, now let's take a look at the numbers because they have officially have 20 years of dividends. Okay, so they start out at 35. 43, 47, 55, 57, 65, 70, 72, wait a second, they cut it down to 57. That's a big drop. From 72 to 57, it's 15, that right? That 15 cents? Yeah, that's 15 cents. That's a 15-cent drop on a $70 stock. Well, that is that's over 20%. They decreased their dividends by 20%. Okay, so 57, 58, 60, 62, stayed at 62 for a while. Whoa, 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 whoa. Yeah. Okay, it was in 2008. They were at 62 and they cut the dividends to 24. And then they paid no dividends in 2009, 10, 11, and they started paying dividends. So they stopped paying dividends for 3 years in 08. Okay? Then it went to 11, 13, 15, 17, 27, 30, 37, 35, 40. Okay. So they're trying to make up for it. Okay, maybe I wouldn't cut them any slack. I've never heard of them. I'm not sure of their performance. But let's take a look at it. Okay, now, it doesn't have 20 years of increased dividends. Matter of fact, it only has like 10. Right? So, what kind of trading are you doing? And you could call it Minnesota Sports. Okay, Minnesota Sports. Let's call it weekly trading. Dividend capturing 2.0. That's a good one. Alrighty. A year ago, blah, blah, blah. Yeah, well, I don't want to look at it because it's nothing I would ever do. Okay, yeah, and it's too close to the high. Look where it is. 30 days ago, down, up, down is your 30-day bottom. Okay, profit's already been taken or going to be ready to be taken. Not a time for jumping in. I'm not going to jump in. Number one, at 14, look at the 14s are going for 5 cents. That's not worth it. All right. IRM. IRM? I never even heard of IRM. Yeah, no. Cisco. All right, J-Rod. Cisco or Cisco? Target has some, yes, Target does have some nice premiums, Sheila. They lure you in with those premiums, and then they throw a black swan at you. I got burned with Target. Okay, guess it jumped up too much today to be a good one for next week. Yeah, you're correct. Wade. Weekly options, buys and sells. Amazon, no. Randall Ray. Hey, James, do you ever look at the probability calculator? Never. Sorry. See, when I say I want to make it simple, if I'm only doing good quality companies, especially companies that have been around, for, generations. Okay, most of the companies I look at, I grew up with in the 60s and 70s and 80s. Shell, Mobil, Bank of America, Capital One Finance, Home Depot, Lowe's. Those companies, I feel very comfortable buying those. The calculator, as long as the calculation says, I'm buying it at this price, I'm selling it this, and I'm making this kind of return. That's my only concern. Because number one, it's a good quality company. All right, I have no problem with that. I got to put my money somewhere. Okay? I always go in as if I'm going to buy it and hold it for a long period of time. But the longest I've ever held anything is only 9 months. Longest this year is 4 months. Okay, and that's American Eagle Outfitters, AEO. They make bread. Dave's Killer Bread. Ooh, I like Dave's Killer Bread. I'm from Jersey. Don't have to be polite. What exit? You're from Jersey? What exit? CVS. I like CVS. All right, someone suggested CVS, so let's take a look at CVS. Who pays the highest dividends? Why not go with that only? Yeah. Now, Alenka? Okay, the reason why, see, some companies offer huge dividends to attract investors. And once you buy that stock, can you get back out with a profit? Or are you stuck holding it? Okay, I don't like big premiums. Now, the reason why I say that, most of the companies I look at have been in business a very long time, and they don't need to attract investors. so they don't play that. So yeah, do a little research on those companies before you buy them, especially ones that have, double-digit premiums. Simone, I wish you could teach me how to pay less taxes, or not taxes at all. Ooh, interesting book called The Tax Informant. The Tax Informer? The Tax Informant by Dr. Chad Prater. You should get that book. There's a couple of books out there. There's even a contest out there. I think it was a $50,000 contest to find out what is the exact law that requires us to pay taxes. To this date, nobody's claimed that prize because nobody can find the law, the actual law that requires us to pay income tax. It's just a contest, okay? But yeah, you do a little bit of research online. You have people on both sides. Pay your taxes so we can give your money away, or you don't have to pay taxes if you don't want to. Voluntary compliance. All right, enough of that. James Clar, C-L-A-R. Yeah, no, dude. All right, we already did Nike. Johnny, have a nice night. Why do you prefer to use the monthly last 30 days on the chart? Well, David, that's an interesting question. Okay, now I'm totally open for suggestions, really am. You can send me whatever you think is the best way of looking to find out where the current buying and selling, this week, last week, and the week before, can give me an idea of where it's going to be in 5 to 7 days. So if you have another way of projecting, okay, remember the strategy. It has to be simple, safe, predictable, and consistent. I taught it to a 9-year-old. So when you say stocks go up, they go down, they go up, they go down, you can get a 3rd grader to say, oh yes, they do. Because look, down, up, down, up, down, up, down, up, down, up. Okay, that is simple. That is easy. Now, when you're talking about indicators, because there are a whole bunch of indicators out there, a whole bunch. But how would I teach a 9-year-old about indicators? And then it's no longer simple. I might as well just throw in the Black-Scholes pricing methodology for the options. Okay, I might as well throw in something about the Fibonacci and the number sequences. If you really want to get technical and you really want to get in there, yeah, you can make a lot of money. But adults have a tendency to complicate things. So I teach the exact same way I taught my daughter. Stocks go up, stocks go down. If I'm buying it for this, selling it for that, this is what I'm making for this week. And it's 1% or more. That's the goal. So if I'm making 1% every single week, granted, I can sit in front of the computer to make more, but that's not what I'm looking for. I'm looking to teach a simple trading strategy. It's not only simple, but it is safe, and it's a very fat number at the end of the year. Now, some people think, hey, 50% is great. Yeah, but then you got to put in 15 to 20 minutes a day. Oh, the tragedy. Think of it this way, all right? If you have $200,000, $300,000, $400,000 in your IRA or your 401 or whatever, okay, 50% of that is up for grabs. So if you have 400,000 in your portfolio, it is somewhere. It is invested somewhere. So why not just step up to the plate and say, hey, this is my money, I'll take responsibility. Great, I got 400 grand, 50% of that is 200 grand. Well, 200 grand for 20 minutes a day, I think that could be doable. Okay, if you're like me and you have less, okay, then you say, all right, this is worth this much to me this year. Okay, because we all start small and slowly grow. If you're growing at 50% per year, what is that 50%? Because if you're starting out with 20 grand, maybe it's not that much. If you're starting out with 5 or 10 grand, maybe it's really not that much. But if you're like most people my age, you're starting with hundreds of thousands. So $100,000, 50% of $100,000 is 50 grand. Okay, and we're talking 20 minutes a day. Most people spend more time with their barbecue plans, or a family reunion, or hey, let's go out this weekend. Let's go fishing this weekend. Spend more time figuring that crap out than they do with their own personal finances. And the faster you get self-sufficiency, hey, the better life is, because money does not make you happy until you have so much. You just, when somebody said something once, that's what they said. For those of you who think money does not buy happiness, you haven't given enough of it away yet. I got that from Tony Robbins and Dean Graziosi. Okay. What about Ulta? Buffett just added it to his list. Okay, that's a good question. Ulta. ULTA. So if Warren added this to his list, $365. Ooh, check out that big jump. All right. A year ago, 463, topped out at 575. This is out of my price range. Sorry. Okay, drops down to 320. Look at that big gap. That baby's gonna have profit taken tomorrow. Look at how that's a big jump. 320 to 370. That's a $50. All right. Yeah, that's a little out of my price range. But anyway, nice movement. The 370s are going for $6. That's over 1%. Does they even have dividends? I don't know. It's not on my list. Yeah, jump was on news. Yeah, figured that much. John Mitchell, yeah, don't take advice from me. Yeah, you don't want to take advice from me. Hey, Jim is sexy. How are ya? I haven't seen you past couple of days. Hey, James, what you are doing with Dell? Should take profit. Ooh, let's take a look at Dell. Okay, nice little jump. Now, Jim is sexy. In case you forgot, I get my positions on Monday. Monday, I sell my options. Once you sell an option, you are locked out of doing anything with that stock. So let's take a look. Okay, Monday, the stock is at 92. Today, it's 110. So I sold my rights away at 92. So whoever bought them, they get this appreciation, not me. I've already got my 1%. I'm already happy. Okay, I honestly could care less. I mean, good for the company. This is what I wanted to do. I want to go for the 30-day bottom, okay? 30 days ago, here's a 30-day bottom. Okay, going to the upside, great. Whoever bought that option, good for them. I made my 1 or 2%. I forget how much it was, but I sold my option on Monday. I made my money. So whoever bought it, good for them. Do you pass on stock if earnings are within the next 5 days? Okay, I don't pay attention to earnings. Yeah, that's an awesome analogy. I'm glad you like it. Amazon. Okay, Amy, I don't like Amazon. Any company that does not share their profits is a no for me because they lack stability. Okay, if you take a look at over the last 100 years, the companies that offer dividends and the companies that don't offer dividends, the balance between stability. Okay, I'm looking for a safe, predictable income. I'm not looking for capital appreciation anymore. Amazon is one of those companies that takes the profits, puts it back into the company for growth. Well, it's working for him, but Amazon's a no for me. Yahoo, ET, please. Energy transfer. There's somebody every night wants to look at energy transfer. And it's kind of good because we're following it, give you ideas of where it's going. Now, I'm not 100% fan of the dividends on energy transfer. Okay, well, let's take a quick look at the dividends. Okay, so they have dividends, all right? The dividends go all the way back into 2006. And they do have an increase. They go from 1, 6, 8, 9, 10, 11, 12, 13, 14, 16, 17, 18, 19, 21, 23, 27, 29. It just keeps on going up. But it's not consistent. Like back here, she was at 31 for 3.5 years. And then in 2020, they cut the dividend in half to 15. Okay, then it slowly went back up again. Now we're at 32. Well, weren't they at 32? When were they? They were at 32. Yeah, well, they were close to 30s. Yeah, they were 32. Sorry, they were 31. Okay, so they were at 31 in 2020, 4 years ago. Then they cut it to 15, cut it in half. Now they're back up to 32. Okay, so I'm not a huge fan of ET, but it keeps coming up. So here it is. Okay, 30 days ago, we're up at 1640. Here's a 30-day bottom, already went up, pulled back again. Now she's going back up again. It doesn't have much further to go. Okay, it may go a little up to 16 and then fall back. Right now it's at 15.99, 1640. It's a very small playground to play in. You know, because your bottom's way down here, and here is way up there. It's closer to the high than it is to the bottom. So I don't like energy transfer this week. All right, let's keep on moving. Keep on moving, moving on down the line. Sell, okay. PLTR, no. Somebody always asks for PLTR, and it's always a no. They don't have dividends. Sorry. LUMN is the play. They are getting contracts right and left. S-Land, you're new here. Never heard of you before, but let's take a look at it. LUMN. Louisiana Mining Corporation. All right, let me try it again. LUMN. Oh, yeah, no. Someone asked me about this yesterday. Okay, last month it was at $1. Now it's at $5.70. Okay, something ain't stirring the Kool-Aid there. I'd like to know who they are, what they're doing, and why they jump so much, and can they sustain that? A couple of questions. No, it's one thing that goes. What do you think about Warner Brothers stock? Nicholas, you actually have to give me the ticker symbol. Oh, wait a minute, I might be able to get it this way. Warner Brothers, WBD, okay. $7.24, $7.25, $7.50 is going for 8. Okay, cool. All right, well, I'm not going to cut them any slack. Let's see what their dividends look like. WBD. WBD. Oh, no. The answer is Ipswich clams. There is no dividends this time collected. Nope. Sorry, no to Warner Brothers. I'm buying whether you're selling. The glitch. Okay, the glitch. All right, high of the year, 1362. That was a year ago. Bottom was Tuesday. Is that right? Tuesday? Last 30 days. Well, there you go. That's a good play right there. I mean, take a look at the chart. 30 days ago, she jumps up, a little bit of pullback with a gap. The gap filled, that gap filled. 30-day high up there. Gap's down. That gap looks appetizing. Okay, that's going to fill. Hey, Mary, how you doing? This gap is going to fill. It's almost closed now. All right, and here's your 30-day bottom. 2 days to the upside. Well, they, in my opinion, 30-day high, 30-day bottom, 2 days to the upside, a gap up here, which is going to fill. All right, so how about Honeywell? Ooh, all right, Honeywell. I think I have Honeywell written down. Yes, I do. I have Honeywell written down already. Honeycomb. I have real raw honey in my drink tonight. And if you ever had raw honey, you actually get part of the beeswax. Anyway, the glitch. It looks like an awesome play if you're looking at strategically just by the charts and by the numbers. Okay? Now, this is not advice by no ways whatsoever, but look at the chart. You can pull it up on any chart you want, but they're all going to say the exact same thing. There's the high, there's the low. Okay, here's the time, here's the dates. So whether you're looking at my chart, whether you're looking at your chart, whatever, the dates, the open, high, low, close, all that kind of stuff, that is That's the official records. It's going to carve it in stone, and it'll be here for 1,000 years. What is the high of the day on Warner Brothers stock on the 12th of August, 2024? Those numbers will be recorded somewhere. Anyway, 7.25. The sevens are going for 33. You're losing 25 right off the top. That gives you 8 cents. So you get 1% doing the 7, if you're okay with it. The 7.5, you're getting 8, which is a little bit over 1%, but the stock has to go up a little bit. And you get the difference between the 7.25 and the 7.50, which is another 25 cents. Cool. Okay, if you like the stock. I mean, don't get me wrong, even though it's not on my list, but that's a sweet looking chart. 30-day chart. Where I sign up, the glitch. All right, now that's the second time someone's asked me about that. Up in my bio over here, top left corner on the TikTok app. Okay, my little picture up there. Tap on that. That'll take you to my bio. In my bio, you'll see a little envelope there. Click on that. That's how you send me a message. If you want to talk to me, send me your number. I will give you a call. People think I'm kidding when I say that. Seriously, I will give you a call. Second, also up there is the 10-minute trader. The link to the 10-minute trader. That's my website. If you do research on Google for the 10-minute trader, you'll see that I owned it for over 20 years. Okay, so I'm not just a fly-by-night person. All right, so that 10-minute trader, live trading right there. Live trading right there. You click on that, and that will take you to the Patreon. Dividend Stock Talk. And look, oh, another picture of me. While we're on this subject, I was watching some videos this morning, and this girl was complaining about how many imposters she has. She has 72 imposters, because apparently she's an influencer. She has 72 people pretending to be her. And I had a comment, I said, oh, damn, I only have 27. Because 27 people pretending to be me. If you want to sign up, if you want to talk to me, send me your number. I'll give you a call, seriously. Okay? But I don't do cryptocurrency. I don't do WhatsApp. I don't do Telegram. I don't do Forex. I don't do futures. I don't do anything but dividend stocks in this particular strategy. Okay? I do have another website, The 10-Minute Trade, but we're still working on that one. So, there you go. Let's move on. You can pay attention to this stock. FLYE Group. FLYE. I've never heard of them. Fly Leasing Management. Yeah, no options. Sorry, dude. That's going to be a no. Okay, NIPG. Sorry, Caleb, no. Take your profit and wait for another opportunity. Sounds like a great plot opportunity. Okay, CP, we already looked at Paramount. Okay, S-Land, CAVA, yeah, they don't have 20 years of increased dividends. CP, Paramount's a hot mess of a company. Yep, but they have longevity on their list. Rich Mattel? Mattel, really? M-A-T. No, monthly. Sorry. I agree. I bought in March. 60 Kappa. Best stock to invest in for 10. Okay. Hey, Michael David Robertson, how are you? Marathon Mom, we already did Nike earlier today. Uh-oh. Did I buy a new computer? No, I didn't. Look at this. I'm caught up. Holy cow. Oh, Connor Burke, you're new here. Thoughts on Maxon? Maxon's a no. But Connor Burke, my favorite dividend stock at this moment in time, Macy's. Sorry. Some people just don't like Macy's. Okay, so we're done with all this. Oh, Brian, Siri. I was about to get to my book for the ones I have written out in my book. Now, we played Siri a couple of weeks ago and made a nice chunk off of it. Wolf what platform would you recommend to purchase dividend stocks? All right, Wolf, I can't really recommend anything to you. I can let you know that I like Thinkorswim. Now, Thinkorswim is free to download, but you got to trade it through Charles Schwab. Now, Thinkorswim used to be their own entity until somebody came up with an absurd amount of money and bought it. So Ameritrade bought it from the original designer, and then Ameritrade got bought out by Charles Schwab. So Chucky Boy's in charge now, but you can download it for free. And I've been using it for 20 years, and I don't like, nothing else comes close to it, in my humble opinion. But it's extremely confusing because there's so much information. Now, I have mine set in a certain way, but that's all I look at. There's so much perks with Thinkorswim. It's unbelievable. Okay. Hypothesis. Coca-Cola, huh? Oh, so Coca-Cola and Cisco. Uh-oh, wait a second. Sheila. AAPS 6.6 plus 6%, 61 cents a share with the expiration date. Whoa. Occidental Petroleum, Drazik, how are you? All right, hold tight with that one. We're going to do these three over here, and then we're going to jump onto that one. Okay, AAPS. Can't find that symbol. AAPS. Sheila. AAPS, can't find that symbol. So let me go back to, oh my goodness, well, where were we just at? That's amazing. That's for your opinion. Thanks, Wolf. All right, let's take a look at Coca-Cola. Coca-Cola is always a no, only because the premiums are horrible. Siri, I was on Siri. Let me finish up with Siri first. Okay, yeah, that's what happens. Okay, Siri, we made some money off of this earlier this year. Now, I do keep an eye on it once in a while when everything looks favorable. Okay, so a year ago, $4.70, topped off in December at $5.79. Okay, coming all the way down here for the bottom of the year on Siri, $2.44. I know kids in high school had that kind of money. Well, when I was in high school, we used to have that kind of money. Oh, AAP, Advanced Auto Parts. Sure, I actually have some of that. Sit tight. We'll take a look at that one. Okay, so the bottom 244. That was a couple of months ago. Last 30 days. Here we go. Ooh, check that out. Nice. So we get a drop here. Shoots back up to the high, 410. Now from 410 to what is this bottom? What is that exactly? 412, sorry. 412 to 286. Check it out, 286 from 412. That's almost a, no, 35% drop. That's a big drop. Up, pulls back, one day to the upside. I would like to see one more day going up before I jump in on Siri. But look at the numbers. At $3, the 3's going for 11 cents. You take the 4 off there, so you're walking away with 7. That's 2%. Somewhere on there. Okay? $3.04. That's the purchase price tomorrow morning. Yeah, you're losing 4 cents right off the top. You're only collecting 11-cent premium. So you take the 4 cents off the 11-cent premium, and you're walking away with 7 cents. It doesn't sound like a lot, but 7 cents is little over 2% of the purchase price. That's a nice trade. I'm going to write that one down for next week. Siri. Because tomorrow, if tomorrow's another up day, great. I'm jumping in on Monday. That's not advice. I'm just saying, if the numbers continue this way and Friday is consistent with what it looks like, down, up, down, up. Okay, think of a seesaw. Remember seesaw in school? Down, up, down, up. That's all they do. Down, up. Okay, great. All right, that being said, let's keep on rolling. We're going to take a look at that in a second, Sheila. Somebody wanted me to look at something. What was the other one? Coca-Cola, we looked. Cisco. Cisco, CSCO. Now, somebody asked for Cisco earlier today, but they weren't clear on which one they wanted to look at, SYY or CSCO. Cisco, Cisco. Alrighty. Big, huge jump. Look at that. 48.58, 48.50. What is this? Okay, 48.50. Alright, you're getting your 1% out of that one, a little over 1%. Okay, interesting. I'd stay away from it because of that big, huge jump today. Okay, a year ago, we opened up at 53.48. The top was 58.24, and that was the beginning of September. Holy cow, September's around the corner. What? Okay, from there, the bottom of, holy cow, bottom of the year. All right, let's look at the last 15 days, 30 days. All right, check it out. Last 30 days. 30 days ago, 47.50. Up, down, up, down, up, down, up. Look at this big, huge jump. There's going to be profit taken tomorrow on this one. More than likely. Wow. Nice. We talked about, hey, Michael, remind me to take a look at this one in the morning. Look at that. The 46s. Okay, the 46 is 6 cents. Wow, that's cheap. Anyway, yeah, I wouldn't do it only because it is the 30-day high. Okay, so let's put Cisco down for the next 2 weeks because you got to give it time to deflate its ego. You know, that big, huge jump. By the time it gets back here, it should be another week or two. So for 2 weeks, we're going to put Cisco down there. CSCO. That works for me. All right. Next, OXY. OXY. Was there another one I'm supposed to be looking at? I don't know. Coca-Cola, where did that? Cisco, we did. Are we doing AAP next? Dude, you didn't do Siri. Yes, we did. We finished up with Siri. We actually put Siri on the list for contenders on Monday because it looked good. All right. Occidental Petroleum. This is on Warren Buffett's list. 57.90. High, low. Where was it? Where is it? Where is it right now? What direction it's going? Cool. 57.90 to 58.61. That's over 1%. Cool beans. All right. 57.90, the 58s, because that's the closest strike price. If I'm buying it here, the closest strike price is the 58. The 58's go for 61. That's more than 1%. That's what we're looking for. A good quality company. Occidental Petroleum. If Warren Buffett didn't own it, if Warren Buffett owns it, that's good enough for me. Sorry. He has a reputation and he has decades of worth of for substantiating his reputation. So I'm cheating on this one, seriously. It's good enough for Warren Buffett. It comes down, it's turning, going to the upside. Okay? 30-day top, 30-day bottom, up, down, up. Okay, one more day should look lovely. So I'm putting that down for next week. I'm not going to circle it because it didn't give me the second update, but I will write it down. So we'll take a look at it on Monday, see what it looks like. Dude, you didn't do Siri. Yes, we did. We did Siri. S-I-R-I. Okay, we talked about this. Okay, 30-day top, 30-day bottom, up, down, going to the upside. I want one more day to the upside. We'll say we're going to check it out on Monday. The three's going for $3.04. You got 11. So you take the 4 off of that, you're walking away with 7. 7 is more than 2% of Siri. So I like Siri for next week if it can continue. If I can get one more. It depends on what it looks like tomorrow. Okay? But usually, if she's coming down, she's bouncing up to go to the upside. So, yep, I did that one. Uh-oh, missed some. All right, we did Coca-Cola, Siri, that. Oh, here we go now. AAP. Advanced Auto Parts. Tra-la-la. 63.48. 63.48. The 63 is going for, ooh, that's nice. The 64, nice. The 65, ooh, wow. Those are crazy. Those are some crazy numbers. They all look good. All right, so let's take a look at the chart. What's the chart telling us? A year ago, 70.33. Bottom out at 47.90. Now that was the end of October last year. Okay. Topped out at 88.56. Now that was in April. Oh, sorry, no. That was the end of March, beginning of April. Okay. Look at that movement. Isn't that awesome? Down, up, down, up, down, up, down, up, down, up. Now, by looking at it, she's trending down, okay, for the month, trending down, but she's in an upward trend now, and she's getting ready to stall out here, and then probably come back down to follow that trend, hypothetically speaking, if she follows the trend. Now, they say the trend is your friend right to the end, because eventually the trend will stop, and it's like, why didn't you tell me? Well, that's not what trends do. All right, keep on going. Oh, so the numbers. Yeah, we already did the numbers. Okay, what does Advanced Auto Parts usually do this time of year? Okay, right here. Here we are, seasonality. Uh-oh. She could go sideways. See that? Sideways for a little bit, for another week, and then slowly dip. Not huge, but slowly dip. Now, that's not guaranteed. Okay, that's what it has done in the past. Now, interesting thing about auto parts, okay, one of the dividend kings with the most amount of, one of the highest dividend kings. GPC, there you go. GPC, Genuine Parts Corporation. They get close to 70 years of increased dividends. And what do? They make aftermarket auto parts. Very, very unsexy. Aftermarket auto parts. But they've been increasing their dividends every single year, going on 7 decades. 7 decades, that's a lot. All right, anyway, let's keep on rolling. So, Sheila, I like it, but she looks like she's stalling out. Okay, look at the last 30 days. Oops, that's not my last 30 days. Yeah, there we go. Whoops, not quite. Okay, there it goes. Last 30 days. Okay, up, down, up, down, up, down, up. Okay, but still coming down. Anyway, she might, but I think she's going to stall, in my humble opinion. More questions. AAPS and Thursday premiums. Hi, blah, blah. Thank you. Does Starbucks have any dividends? Yes, they do. Starbucks is on our list. Let's try ExxonMobil. Woohoo! ExxonMobil. XOM. Whoops. I was thinking of ExxonMobil today. As I'm driving home, I drive past an abandoned mobile gas station. I thought, wait a second, the stock's doing good, but this is empty. That doesn't look good. You know, upper management should get on top of that. At least get the sign down so you're not advertising as mobile as a failed gas station at that particular town. I'm sure they're not. Someone's not going to be happy about that. Earnings today on Cisco. Thanks, Jack. 86. Yes, but dividend date is tomorrow. Okay. Preston 3 tray. Okay. How you doing there, Preston? Uh-oh. Somebody wants to take a look at Nordstrom's. I like Nordstrom's. Andrea, where you go? We'll take a look at that. But hold on. Hold that moment. Let's take a look at ExxonMobil. A year ago, 108.86. Bottomed out in January at 95.53. Topped out in April at 124. Look at that nice movement. Isn't that awesome? Look at it. Up, down, up, down, up, down, up. It looks as if it's coming down. It does. Because look, she's trending to the upside. But she's going up, they're taking profits. She's going up, taking profits. Going up, taking profits. Going up, now we're going to be taking profits again. It all depends on how you interpret it. You can interpret, up, down, up, down. Uh-oh, up. Yeah, no, I say people are going, it's going up and people are taking their profits. Okay, comes back down a little bit, gets a little low, goes back up, people take their profits, comes back down. Accumulation, distribution. Up, down, accumulation, distribution, same thing. Andrea, Nordstrom's. Oh, crap. Nordstrom's. JPN. No, JPW. No. JNW? No. I thought it was a crazy one. All right, let's go. JWN. I was close. JWN. It just shows you that I haven't played it in a while. All right, that's probably why. All right. High, low, where was it? Where is it? What direction is it going? Cool. Currently at 23.14. All right. And the 23s are going for 35. Okay. You take 14 cents off of it, and that brings you to 24. Yeah, you're making just 1%. Okay, fine. We like 1%. Let's take a look at the last 30 days. All right. Yeah, I'm going to say no to this one for this week for me. The reason being, up, down, it's a gap here, the gap filled, down, up, down, and a gap here. All right, but she's in a little bit of a downtrend here, but there's your profit right there. See, up, profit taking, up, down, profit taking. Yeah, tomorrow will be a little bit more clearer, okay, but I wouldn't jump in. That's me. I don't like the way it looks. It's give me 1%. There are other companies that give 1% or more. If you trust your intuition, you take a look at it and say, wait a minute, this gap here, if it is true that gaps have a tendency to fill. See this gap over here? It filled there. Well, there's a gap here. Well, that's going to fill eventually. Okay, and it is too close to the trend line. See, the trend line is going this way. Okay, up, down. Okay, your profits, accumulations, profits, accumulations, profits. Well, from here to there, that's a nice jump. Oh, in one day. So yeah, there will probably be profits coming up next week, if not tomorrow. So Nordstrom's a no for me. Okay, it's not advice, it's just I'm not doing it because it doesn't look good to me. I think a call for SPY tomorrow was a good decision for me. Well, Eric, cool beans. Your opinion on ASO? Well, you shouldn't call them an ASO. ASO. Academy Sports. Never heard of them. Okay, hold on a second. ASO. I'm going to run over to Yahoo Finance and get my opinion on ASO. Oh, they have dividends. Cool. All right, I'm going to say no because they only have 2 years of dividends. Okay, CPA, think about it. Okay, I don't tell people where to put their money. Really, I don't. Okay, but when I say, what the hell are you thinking? Putting your money into a company that only has dividends for 2 years. Most companies don't make it past 3 to 5. Okay, so they're paying dividends for 2 or 3 years. Okay, what happens in 5 or 10? Can they be consistent at it? Okay, are they consistently profitable? Is this a safe place for my money? For me personally, no. It may be a great company. It may have the best people in the world working there. Well, good. Let them work there for the 16, 17, 18 years. And then when they have longevity attached to them, maybe I'll take a look at them. Because there's 300 companies I currently track because they have 20 years of increased dividends. Why would I add a company that only has 2 years of dividends? There's no warm fuzzy feeling for me. Okay? Now, if you're younger, I can understand that. You want to take risks, you want to take chances. It's a young company. Well, maybe they'll do something. Maybe they'll increase in price faster. I don't know. It's not what I'm looking for. All right, so I'm going to say no to ASO. For me. Okay, if you like it, great. Right now, she's at, your 30-day high is up here. Your 30-day bottom's here. Look at the run-up you got. So it does have, it looks like it has more space to go. Okay, this gap here filled. See that one? There's a gap here. So eventually, once it goes up, it should come back down and fill that gap. But yeah, it's a no for me. Sorry. DVN. Ooh, 86. We like Devon Energy. DVN. Okay, high, low, blah, blah, blah. 47, 40, 45, 47 to 47. Okay, 1% works. Okay. First thing I want to see, the high, the low, where was it, where is it, what direction it's going. Look at this bounce right there. Cool beans, I like that. Okay, the numbers. Oh, holy cow, sciatic, that was interesting. Holy shit. Okay, 45, 47 is the price that I can pay for it tomorrow morning. Okay. The closest strike price is going to be the 45.50. Right there, 45.50 is getting its 59 cents. That is well over 1%. So we want to find out exactly what it is. Well, let's figure it out. 59 cents. Purchase price is 45.47. 45.47. 1.3%. Okay, but here's the thing. Johnny, tell him what he's won as a consolation prize. Okay, 45.47. You add 3 cents to that, and that's your 45.50. So if it goes above 45.50, you get to collect an additional 3 cents. It's not going to be earth-shaking, earth-rattling, but it's over 1%. And that's what I'm looking for, 1% per week. And Devon Energy is one of those companies that we feel comfortable with. Well, I feel comfortable with it. Okay. There's definitely opportunity in Exxon. Thank you for your analysis. Hey, Wolf Tribe, not a problem. You have fun with that one. I like ExxonMobil. I don't know if I like it for this week, though. Chubb. Ooh, Chubb used to be a dividend king, but they fell from grace. Bummer, bummer. CHB. Chubb. Oh, CB. That's a no. Okay? CB is a no because it's a monthly. See, 272. If I do the 272s, well, there isn't a 272. I'd have to do the 275. And that's only paying $4.90. And the stock has to keep going up. I'm not going to bet that thing's going to continue to go up for another 30 days. Hell no. Okay, 5 days is hard enough to figure out where the stock is going to go. Look where it is. Okay? Look at the chart. Okay, 30-day bottom right here, 258. 30-day top, 278. Pulls back, 264. Now we're at 272. Well, great. If I buy this at 273.15, there is no 273, so I'm either going to 270 or the 275. Well, the 275 will give you 1%. Great. That's not the issue. Okay? The issue is wonderful. But I've got to divide it by 5 because it's 5 weeks away. And now I have to figure out where's the stock going to be in 5 weeks. Well, look, she goes up, she goes down, she goes up. 5 weeks, she's going to go up and come back down again. How the hell am I supposed to know where it's going to be? I don't know. See, I'm not jumping in to hold on to something. It's like, so what, I'll make a little bit of money. No, I want to know where it's going to go. I want to know where I get on the merry-go-round and where I get off the merry-go-round. You know, I kind of want that 1%. I'm not looking for that excitement. Oh, hey, where's it going to be in 5 weeks? No, thank you. I don't do monthlies. They're a pain in the butt, in my opinion. Now, some people like them, but think about it. If you're going to collect checks, let's just say, because in the old days, they used to send you a dividend check. Okay? All right, so they don't do that anymore. It would be nice. You could get it if you wanted it. Okay? I would like my premium checks and my dividend checks sent to me. Great, wonderful. They'll send it to you. But if I'm going to do a monthly, I'm going to do it 12 times a year. That means I'm getting 12 checks a year. No. I would prefer to do a weekly because I get 52 a year. It's a hell of a lot better. And I only have to figure out where's it going to be in the next 5 days. Well, here it's pretty easy. The next 5 days, more likely she's going to go up just a tiny bit and then pull back down again. Okay, so in 5 days, she'll probably be at 274. She'll probably go up and then come back down, 272 or 274, up and then back down again. That part's easy. But 5 weeks? No. All right. Next. Okay, CPA. I believe in ASA. No debt and lots of cash. What am I missing? Oh, wow. I just had this really crazy ass shit. And I don't want to offend anyone, so I'm not going to say it. So, it's a 2-year-old company or 3-year-old company. It's a very young company. Oh, here's a good way of looking at it. Let's say, hypothetically speaking, you had a couple of $1 million car. Let's call it a 1935 Bugatti Royale convertible. Cool. There's only one of them in the world. Okay. Last I knew, it sold for like 14 million. Okay, let's just not do that. Let's do like a Lamborghini, Rolls Royce. Really nice car. Would you give that to someone who's only been driving for 2 years? Or would you give that car to someone who's been driving for 20 years? Experience, longevity, and performance. That's what it's missing. Cash comes and goes. Okay? Now, certain companies, let's take Walgreens for instance. Walgreens is a 100-year-old company. Okay, they have 8,700 stores worldwide. Okay, granted, they're not a new company with lots of cash and no debt, but they do have 100 years of historical performance behind them. They are entrenched into the corporate world. Okay, they're not going anywhere. Now, ASO, never heard of them before. 2 or 3 years worth of performance, not even close. Okay, that's just my opinion. Not even close to having any kind of stickability. Okay, most companies don't make it past 3 to 5 years. Okay, 1 in 100 or 1 in 1,000 make it to 10 years. Yeah, sorry, I put my money in true, tested companies with historical performance. That's what it's missing. Okay, I would not get. I taught my daughter how to drive. Actually, I taught all my kids how to drive. But my daughter, I taught her to drive in a Porsche with a 4-speed. Okay? She'll always remember that. But would I let her take that out? Hell no. Now, that's because she just got her license. New, no experience. Okay, 20 years, wait a minute, 10 or 15 years later, not a problem. Here you go, honey. She's got experience now. She has been driving for more than 2 or 3 years. All right. I think I beat that one enough. Andrea, I was thinking next week, Nordstrom's. Okay, I forget. I'm going to have to open it up again because I forget what Nordstrom's. JWN next week. Okay, I would say 2 weeks, but that's me. So I'm actually going to write Nordstrom's down for 2 weeks, but not next week because I don't think, because look what the bottom is. The bottom's at 19. Okay, I don't think it's going to come down to 20 into this area in 1 week. I would think my personal opinion, 2 weeks. Look at the movement. It's really not that big, really not that fast. Well, here it was because it was a big jump and people really wanted that profit. Okay, but she's moving back again. Okay, but yeah, not next week, but the week after. So I'm putting Nordstrom's down for 2 weeks. JWN. Okay, but a good one. Yeah. Okay. Kenny, we already looked at Chubb. Someone's saying something about ASO again. James! ASO opened in 1938. They just went public in 2020. Interesting. But still, they only have 2 or 3 years of dividend increases. Okay, that's what I'm against. Okay. ASO. Academy of Sports. Okay. Ouch. Ouch. James, did you see this? Okay. forward dividend and yield. The dividend is 44 cents. The yield is 0.87. 0.87. James, oh wait, no, sorry, all right. Bama Redneck. That's not even 1% for the year. So I'm not seeing what you're seeing. Okay, that's a summary. Academy of Sports falls 15% year to date. What's next for investors? Okay. Statistics. 3.8 billion. So it goes 2023 4.4 to 3.2, 4.6, 4.3, 3.8. It's going down in value. Enterprise value 5.1. Okay, so 5 years ago it was 5.9, then it dropped to 4.7, then jumped to 6.1, then it dropped to 5.6, and it dropped again. Book sales 77, 58, 81, 63. That's dropping. Price book. Okay, 5 years ago it was 266, then to 191, 259. Now we're at 192. Enterprise revenue dropping. Okay, I'm not seeing what you're seeing, dude. Oh, quarterly revenue growth negative 1.4. Quarterly earnings growth negative 18%. Total cash diluted book value 26 bucks. Okay, operating cash flow 680 million. Levered free cash flow 374. Payout ratio 5.8. Yeah, I'm not seeing it. All right, okay, Bama Rock, whatever you're seeing, I'm not seeing it. Canoe is going to pop. Cool beans. ASO has 265 stores, mainly in the South. Okay. Any recommendations to look at? Okay, so no. Okay, Bama Redneck. Okay, 285. Let me think. Walgreens has 8,700. CVS probably has over 20, 30,000 also. Okay, so 285 stores is really not that much. What is that, one state, maybe two? Okay, we're talking worldwide. Thoughts on CPRX? I could say no now, or you want me to pull it up and say no? All right, let's pull it up and say no. CPRX. CPRX. No. Two reasons. Reason number one, is at the high of the year. Yeah, no. Okay, reason number two, it's a monthly. Okay, usually. Okay, so that's a no. All right, so it is, oh, we got 4 more minutes and I ran out of questions. You guys have no more questions for me. Holy cow. All right, let's go to the book then from yesterday. What do you look for before selling puts and calls? Well, Alex, I don't sell puts. And the calls, I kind of do covered calls. Now, covered calls where you buy the stock first and then you sell the call option. I try to stay away from puts because puts just are really not that good for me. They're good, you know, once you understand them. That's what I should say. Once you understand them, well, they're pretty good, just like the call options. But when I'm trying to teach the strategy, it's got to be simple, safe, predictable, and consistent. You throw puts in there, it gets kind of complicated. Okay, I like to say simple and safe. That's it. I teach the strategy the exact same way I taught my 9-year-old daughter. And when I tell you, I did not tell her about the Greeks, you know, the delta, the theta, the gamma, all that crap. I didn't teach her about that. That's confusing. I didn't teach her about implied volatility. I did not teach her about the Black-Scholes pricing methods of options. I didn't teach her any of that. I told her simplicity. If it is a good company, great. There should be no reason why we wouldn't want to buy it. All right? This company, I've never heard of them. So it automatically a no for me. All right? Okay, it says monthlies. Again, it's a no. So when I say simple, okay, when I picked out the stocks for my daughter, they were companies that I knew. How about the Lending Tree? Never heard of them either. I've heard of the Giving Tree. That's a book. That's a cool book. Let's progress. All right. Back to the book. Next on the list. OXY. Ooh, Harley Davidson. Ooh, somebody want to take a look at Harley Davidson. Yeah, I know Lending Tree does mortgages, but they haven't been around for 20 years yet. Harley Davidson, HOG. But if you want me to take a look at it, I need the ticker symbol. Harley Davidson, 37.35. Look at the chart. High, low, where was it? Where is it? Blah, blah, blah. The 37 is going for 60 cents. Well, you're losing 35 cents right off the top. So you're walking away with 25? Is that right? Yeah, you're walking with 25 cents on a $37 stock? No. The 38's 25? Yeah, no. Sorry. All right, so you want to take a look at Tree. T-R-E-E. Nope. Wasn't that quick? Nope. It's a monthly. You should have said, come on. You've been here before. You know I don't like monthlies. All right, Eric, I don't like monthlies. Snow is a no. Okay, now the reason why snow is a no, I'm pretty sure they don't do dividends. S-N-O-W. Let's find out. There's a reason why I don't do snow. I just got to figure out what it is. Historical data. There we go. My eyes aren't focusing. Historical prices. Dividends only. Oh, that's right. There are no dividends in the selected time period. That's why snow is a no. Yeah. Somebody want to sucker me into that SMCI. That stuff is crap. So is CHD. All right. It is 11:30. I'm saved by the bell. This way I don't have to subject myself to the number one turd, SMCI, number two turd, SCHD. You really want to get picked on with those, we'll do it tomorrow. But as of tonight, we are done. Snow's on Warren's list. Yeah, it's on Warren's list, but it's not on mine because it doesn't have dividends. Now, Warren does have companies in his little corral that do not coincide with mine. Now, Apple does because it has options and it has dividends, but not enough for me. But Snow has no dividends at all. So that's a no. Have a great night. Woohoo! Thanks for taking my questions. Cool beans. All right, well, you guys have a great night. We will see you again tomorrow because the sun will come out tomorrow. Could I ask why no on SMCI? Because the big fat turd. Okay, quickly, SMCI. I'm gonna bypass this. I'm gonna go straight to the source. Okay, when I mean the source, Yahoo Finance. SMCI. There are no dividends in this time period. How's that? SMCI? No dividends at all. It's no. That's why it's a no. There are no dividends. Why would you come to a channel that says dividend investing for weekly cash flow? The first clue, it has no dividends at all. So why would you suggest it? When I say it's a no, and then you question me, why is it a no? Because it doesn't have any dividends. You didn't like the first no, so I'll give you the second one. No, there are no dividends. My favorite dividends, oh my God, Maxwell. O's a turd also. What's next? What is 1%? All right, David, 1% is 1%. Okay, $100 bill, $100 bill, 1% is $1. Okay, $1, 1% of $1 is 1 penny. 1% is 1%. And if you get 1% every single week, that's 50% per year. Okay, what's wrong with O, Maxwell? Oh my goodness, what's wrong with O? Okay, what's wrong with O? Okay, we're gonna go stick it with Yahoo Finance. Okay, let's look at the dividends O pays out. Now, we're going to maximum amount of dividends. Where is it? Right. Okay, maximum amount, see that? Now let's slide down, watch the dividends. Hypothetically, we're going backwards in time, so these numbers should be going down. 26, 26, 26, 26, 26, 25, 25, 25, 23, 23, 23, 23, 22, 22, 21, 21, 20, 19, 18, 17. Whoops, what was that? No dividends in 2014. Wait a minute. Okay, yeah, they did. Okay, there it is. 18, 14. Okay. So they got dividends, okay, and they slowly go up from 1994, 7, 8, but it takes so long for them to increase their dividends. That's one reason why I don't like them, okay? But here's one of the main reasons why I don't like O, okay? 5.25% for the year. You can get federal government bonds that pay better than that. Okay? Now, if I'm standing here showing you how to make 50% per year, and you think 5% a year is good, I can't help you out. What brokerage do you use? I use I used to use Thinkorswim. They got bought out by Charles Schwab. So I use Charles Schwab. Why? Uh-oh. Did somebody just ask me? Shane! All right. Shane, apparently you're new here, because, one, I recognize the name. I've never seen it before. It says, why are you chasing dividends? If you want weekly cash flow, sell weekly calls. So I can tell you're new here because that's exactly what I do. But I do them on dividend stocks, specifically good quality dividend stocks. The reason for good quality dividend stocks is because, hold on, let's go here. Each one of these little green dots here behind me represent a company that has a dividend, and this is when they're paying the dividend. So why do I incorporate dividends with selling weekly optionable stocks? Because the stocks, specifically these ones, have a tendency to go up in value before the green date. Okay, so if I like Johnson & Johnson or Yum, I would buy it 2 weeks before the EX date on a Monday at the market open, as long as I can collect 1% premium between the 12th and the 16th, selling weekly options. So if the stock goes up before the 27th, hypothetically speaking, I can jump in on a Monday, be out on Friday, collect my 1%, say thank you very much, I'll see you again in another 90 days. Because each one of these companies pays a dividend every 90 days. So there's over 300 companies that do this for me every single week. Johnson & Johnson, Yum Brand, Home Depot, AG&C, Baxter, DuPont, Dow, GLW, Corning, Goldman Sachs, NUS, Nu Skin. I want to say Tapcom, but that's not quite right. Anyway, but every one of those companies there, I have been playing for the past few years. I buy it, take my 1%, say thank you very much. 1% per week is 50% per year. And I do that with dividend stocks and weekly options. I put the two together. So I only buy the stocks when I know they're going to go up. And how do I know they're going to go up? Well, because they usually always go up before the dividend. Now, will Yum Brands go up after it pays a dividend? Probably not, because after they pay the dividend, they have a tendency to drop a little bit. Tendency, not always. All right, so I'm past 11:30. Uh-oh. When will, what's your favorite? My favorite is Macy's. Thoughts on putting it on the green? Thoughts on putting it all on green? Yeah. All right, well, we're done. Can you show us how you would sell a call option? Oh, cool. Let's do one real quick. Let's do Macy's. It's one of my favorites. Oh, you know what? Yeah, let's do Macy's. One of my favorites. It's currently at 1698. Great. I like the 16. I like the 17s. Good. Let's get rid of that. We're going to change this here to covered call, covered stock. There you go. I said I like the 17s. The 17s right here. Buy that. I got the double. I'm going to change this to market order. There we go. See, I'm buying 1,000 shares of Macy's at the market. Okay, and I'm selling 10 contracts of Macy's, the 17 call at the market, first thing in the morning. Here's what it says: buy 10 covered Macy's 100s. Those are the weeklies. 23 August 24. That's next Friday. The 17 call on Macy's the market to open. Okay, here's my break even, 1609. That's my break even. So anything over 1609 is going to be a profit. So right now it's at 1704. Okay, fine. Maximum profit here is 900 bucks. What's it costing me? 16,000. Let's get out the calculator. Okay, so if my max profit, clear that, $905, and my investment is 16,101. Okay. Cost of trade including commissions, 16,001. Okay, there's my profit, 905. There's the cost for this adventure, and look at that, 5.6%. That's crazy. How'd you set up that TV monitor? Lots of wires. No, actually, my computer has SMCI cable. SMCI cable, so it goes from my computer to the smart TV. All right. So, all that being said, you guys have a great day. We will see you again tomorrow. Pakaris, am I too late? I'm actually turning off my computers as we speak now. Okay. Bye, all y'all. Have a great night. Pakaris, see you tomorrow, dude. Come on.